for only $3.80 a week. Call now, 800-647-5700. That's 800-647-5700 for the Wall Street Journal.
Dark skies for Sunglass Hut?
For Sunglass Hut, Ron, and for the primary driver of the premium market, and that is Oakley.
David today staked out outside of the Time Life building to do the Time Warner Turner merger. He got Richard Parsons, Time Warner president, talked to him for a while. Kind of interesting what he had to say.
So the GM strike appears to be escalating. Scott Cohn's going to come on to talk about that.
Well, amid all the bond market's nervousness, stock traders appear to be squaring their positions ahead of important inflation and retail sales figures out tomorrow. Now, cyclical stocks are bouncing back, chip stocks getting nicked, banks and brokers are bent today, while the day's earnings reports are mixed. Bonds battered while oil is taking another dive, and commodities overall are getting clipped. Good afternoon, everyone. Welcome to Street Signs. I'm Ron Insana. Time Warner and Turner Broadcasting, 2 steps closer to becoming one company. Wall Street reporter David Faber will join us later in the hour with all the latest. Federal authorities have moved to arrest 45 people on securities fraud and other charges in a nationwide crackdown on illegal stock promotion. And shares of Sunglass Hut are sharply lower today. Competitive pressures and company expectations for weak third quarter results. Some of the reasons for the decline. Our stocks editor Joe Kernen has the details in today's Market Lab. Before we get to those stories, stock market holding up relatively well despite a rather steep drop in the bond market again today. Bond traders nervous ahead of tomorrow's PPI and retail sales data, worried about the strength of the economy after the drop in jobless claims. So we are seeing a bit of a pullback as bond traders move away from pricing in a neutral Fed policy towards a policy of higher interest rates. Taking a look, though, at where the stock market stands at the moment, the Dow off its lows, down 4 points. Alcoa, as we set up sharply, DuPont and IBM up more than $1 apiece. Merck is back on the downside, AT&T off a half, among the notable decliners inside the Dow thus far. Transports, by the way, are stronger, while the utilities are a little weaker. Declines beating advances 6-5 on the New York Stock Exchange, 927 issues unchanged. Also, the NASDAQ backing off modestly, down a half. Intel and Microsoft a little weaker today, 415 million shares changing hands there. Now, S&P 500 down about 2 points at 694.83, dragged down by this bond market, which is near its lows of the session. The 30-year Treasury bond down 22 ticks, and that drives the yield back towards 6.9%. As for the dollar today, mixed, down against the yen, up against the Deutsche Mark, unchanged against the British pound. There has been some speculation in the oil market, according to Bill O'Neill of Merrill Lynch, that Saudi Arabia may be interested in upping its production of crude oil, a rumor which has weakened the oil market today. Right now, light sweet crude in New York is down a whopping 74 cents at $24.33. Some technical related selling said to be the culprit as well. Brent North Sea crude is down 2/3. We should point out there's no data to substantiate those rumors. We'll talk to Bill O'Neill in the next half hour of this program to find out more about that. Meantime, for more on the mood of the stock market in the last hour of trading, let's head down to the floor of the New York Stock Exchange. Jay Duryea joins us, an independent broker and president of JM Duryea. Jay, thanks for being with us today.
Thank you, Ron, for having me.
What's going on down there today?
Actually, as you mentioned, the bond market's off pretty substantially here, and some of us are very surprised that stocks haven't followed them more in step with the bonds. Apparently, resiliency is being shown once again.
Do you worry about the disconnect that's taking place today, though?
No, I don't worry about it. I just, I'm a little surprised that it hasn't stayed with it more closely. But I don't think it's anything to worry about. I think the utility market has certainly shown that it's concerned about the bond market action of the last 2 or 3 days.
How important are tomorrow's producer price and retail sales numbers?
Well, I think they're fairly important because of the action of the last 3 days. If the bond market had stayed in a narrow pattern for 3 days, I would say that the figures could be looked at in a somewhat benign manner. But with the bond market off substantially in 3 days, I think that they'll be closely followed. And any negative surprise will certainly be reflected quickly in the bond market.
Indeed. Jay, thanks for joining us. Appreciate
you.
The time. Jay Duryea, independent broker and president of JM Duryea. Now, for what's going on in the bond market, we turn to Jim Kenney, who is the chief bond trader over at Prudential Securities. He joins us from that company's trading floor. Jim, good to see you. Thanks for being with us.
Good afternoon.
What is wrong with this bond market today?
Well, I think it's a combination of things. I think we probably got way ahead of ourselves the other day. We talked about it. I think we had the bond, long bond trading up around a 6 3/4. We had 2-year notes trading under a 5.90, maybe 5.85 or something like that. We still have a Fed funds market the Fed funds rate that's still at 5 1/4. Fed has shown no inclination to change that at all. They're certainly not in the process of easing. We've built some strength into the market that maybe wasn't deserved, and we're backing away from that. We also had help from the European markets, which had enjoyed a fairly good run in here over the last several weeks. Those markets are softer today, and I think that also has pushed us a little bit lower. And coupled with all that, we have the supply. We had a 10-year note auction the other day. It was just an average reception to that issue. We have some more paper coming out in the next few days. We'll have a 2-year and a 5-year announced on the 16th. We'll have the refunding announced on the 30th of this month. So supply is going to be a factor in here as well. I think you put all that together and you have to get to more reasonable levels. And I think reasonable levels in the 2-year area probably is closer to 6% or slightly north of 6% when you have a 5 1/4 funds rate. And I think in the longer end of the market, it's probably maybe not 7%, but certainly a little closer to 7% than we had been trading.
Jim, let me ask about something. Yesterday we talked about Georgia State University's Don Radicek making a slightly disturbing forecast about the monthly producer price number. And I realize he talked about that on October 1st here on CNBC. But yesterday, for some reason, it captured the attention of traders. He suggested that the overall producer price number might be 0.4%, that the core rate might be 0.5, but he told me that would just be a payback for an unusually weak August figure. Why all the, kind of nitpicking about this number lately?
Well, I think what happens is the market gets to a certain level and it kind of runs out of support. It also has the people who are along the market, who own paper, scratching their heads and wondering what kind of a number do we need tomorrow in order to justify the levels we're at. And certainly a PPI number of 0.4 or 0.5, whether it's going to be a give back or not, is going to have an immediate impact on the market, which is going to be quite negative. If we also get a big retail sales number, the same thing would happen.
Thanks, Jim.
You're welcome.
Jim Kenny, head government bond trader at Prudential Securities. All right, let's head over now to the Market Lab, where stocks editor Joe Kernen is standing by. And Joe, for a short time there, Sunglass Hut's futures was so bright it had to wear shades, and now looks like it wants to get back into the shade here.
54 million shares outstanding, Ron. 13.3 million have changed hands so far today. That's a large part of the float. The stock down 4 3/8 now. Most active stock on the NASDAQ. In fact, the most active stock in the country by a long shot. Down 4 3/8 at 9 1/8. 12-month high 36. What's kind of interesting is how many brokerage firms are just going to a hold today from a buy, from 36 to basically close late yesterday at about 13 or so, going to a hold this morning from a buy. I'm talking about Alex Brown to a neutral from a buy. Morgan Stanley going to a neutral from outperform, and Smith Barney going to a 3 from a 1, I am told. Anyway, what the company said, Ron and folks at home, was that comp store sales now look like 2.1% for the 5-week period, an unheard of number almost for Sunglass Hut, which in the past, 1994, was averaging somewhere around 13% and growing very quickly. Back in 1995, last year, still double digits, somewhere around 10%, but 96 this year, been trending to low single digits, and that's what the yearly chart looks like for Sunglass Hut. Tough to say what's really going on here. People that still like the stock say it's really just due to a lack of exciting new products from the primary driver of the premium sunglass market, Oakley. If you look at this chart, maybe that would make sense. Look at Oakley today. No news from Oakley, down 8 1/4 points. That is the sunglass maker that really does drive this market. 30% of Sunglass Hut sales are from Oakley. Down the road, which may help things, they may introduce something called X metals. There's a lot of hype with those, but maybe it's something with the overall market for sunglasses, and maybe even, Ron and folks at home, it has something to do with just premium goods like Tiffany and the like. In fact, we had a retail analyst on this morning. I asked him that question, and this is what he said.
Retail sales are basically a downscaling. The public is downscaling its expenditures. They are buying less, and what they do buy seems to be less expensive. And these are some of the things that are affecting, and badly so, retail sales, with the exception of certain stores that are moderately priced discount stores.
The average ticket at Sunglass Hut, about $80, but you can spend up to $300 there. I don't know what this means for the Guccis and the Sachses of the world, but one other analyst did say it wasn't nearly as sanguine about the prospects. He said there was a little bit of smoke around Sunglass Hut in the first place. At this point, there was just a pure and simple case of overexpansion with no control systems in place. And when he saw this kiosk of a bunch of different watches to buy at Sunglass Hut, that's when he thought it might be over. Back to you, Ron.
Well, Saks is looking like it's at a new all-time high, and I think Gucci's doing pretty well so far. Too.
And no problem in Tiffany yet either.
No.
So.
Thanks, Joe.
All right.
All right. Still to come, Maria Bartiromo takes a look at what promises to be one of the hottest IPOs of the year. We'll have the details on that when Street Signs continue. Stay with us.
This program is sponsored by Brown & Company. Deep discounts for the experienced investor.
George Brown here. At Brown & Company, we've uncovered ways to save investors money, like our $29 flat rate and commission rates up to 86% lower than regular discounters. Margin rates up to 2% lower. Even a 10% volume rebate. How can we go so low? Because we only take investors who meet our high standards. Call for your free information kit. See if you're good enough to get our low rates, or if you're in over your head. Brown & Company. Who do those other guys think they're kidding?
In a sea of mutual funds, may we interest you in a boat? Call 1-800-MainStay for a prospectus containing more complete information.
Oh, the online services charge so much.
If you're a serious investor in using an online service to get stock quotes and financial news, then you should know the switch is on to DTN Wall Street.
Well, in evaluating several other services, I chose DTN because of its price, because I don't have to have an additional phone line, and because of its flexibility. It has a lot of news items on it.
I like the idea that I pay one flat fee a month. I know what I'm going to pay. I do not like surprises.
Stop paying costly access fees for your quotes and news and call DTN Wall Street. In fact, we're so sure you'll like DTN, we'll give you a 30-day free trial. DTN Wall Street. Profitable investing just got easier.
Well, Prodigy is like a French restaurant. Everything's a la carte. Well, with DTN, you get everything for the same cost. And it's a very low cost, 24 hours a day.
The monthly phone charges alone were more than what I pay for DTN. And now I'm saving some real money.
MainStay Mutual Funds. Every portfolio should have one. Call 1-800-MainStay for a prospectus containing more complete information.
Tonight on Politics with Chris Matthews.
Vice President Al Gore and Republican Veep candidate Jack Kemp squared off last night. Who committed the gas? Who won? Did it change your vote? Tonight.
Politics with Chris Matthews.
From the people who shape national policy to the people who cover our world and how we see it. The people, the issues, the opinions. Equal Time with Dee Dee Myers and Faye Buchanan. Weeknights only on CNBC.
I think it did get a little bit overextended, not unwarranted that we have a bit of a pullback. We could even go back down to 5,700 or 5,750, but that's quite normal in the type of move we had since the lows from July.
That was Jim Pizzo, market analyst at Oppenheimer, a guest earlier today on CNBC Squawk Box. Well, a week lately couldn't go by without mention of an initial public offering. Tomorrow, travel reservations company The Sabre Group will be the latest to join the IPO ranks. Our Maria Bartiromo is at the New York Stock Exchange now with a preview. Maria, as they said in the paper the other day, a little saber rattling, huh?
Oh, yeah. Ron, Gulf Aerospace today, Sabre Group Holdings tomorrow. American Airlines will sell nearly 16% of its travel and ticketing processing unit to the public tomorrow. And it is expected to be the second major hot IPO this week. Wall Street traders say investors are impressed with this company's strong profits, dominance of the travel market, and the possibility here for international expansion. All of the above has been evidenced by an upgrade in pricing of the IPO. Let's take a look at the numbers. Sabre will trade under the symbol TSG. AMR boosted the price of the IPO by 17% to raise as much as $545 million. Pricing for 20.2 million shares started at between 20 and 23 a share and is now estimated at between 25 and 27 a share. Pricing will be finalized tonight. At the high end of $27, the stock will trade at 17 times 1997 expected earnings. Those expectations are $1.59 a share. and they come from Goldman Sachs, the company's lead underwriter. Goldman says it sees a lot of investor demand as well as strong consumer demand for a travel reservation system. As for company fundamentals, they shape up like this. For the 6 months ended June 30th, income fell 6.3% to $119 million, while revenue rose 9.2% to $838 million. But even more compelling, net income is up 67% since 1991. Developed in the 1960s, Sabre is used by more than 29,000 travel agents in 70 countries. The company booked 40% of all U.S. airline flights in 1995. And Sabre says its international reservations are growing at an annualized rate of 28%. It's hoping to boost revenue by building on its existing base of 3,900 travel agency clients in Europe, 3,000 in Latin America and South America. The one concern, possible competition. It's facing growing threats from other distribution channels, such as the Internet and World Wide Web. What a surprise. Already, many would-be flyers avoid travel agencies and go directly to the Internet to book flights. And in July, both Microsoft and American Express announced online travel booking services to begin in the second half of 1997. For Sabre, however, most analysts don't think such threats will be very significant for about 3 to 5 years out. And that's all from here, Ron. Back to you.
Thank you, Maria. Maria Bartiromo in today's report from the street. In today's stock block, shares of Altera are up 6 1/4 points now at 60 1/8. The chipmaker reported third quarter earnings of 53 cents a share, 2 cents above estimates, while reducing excess inventories. Apple Computer, meantime, up 1 3/16 at 24 3/16. Prudential Securities boosted its rating to buy from hold and increased its 1997 earnings estimates to $1.40 a share from $1.10. Broderbund Software up 2 1/2 at 26 5/8. The maker of educational software products posted a third quarter loss, but Lehman Brothers reportedly raised its rating on the stock to outperform from neutral. Shares of Olin surging 4 1/8 to 88 1/4. Olin plans to spin off its ordnance and aerospace divisions to shareholders and sell a Louisiana-based chemical business to Arco Chemical for $565 million. It also announced a share buyback of 10% of its stock and a 2-for-1 stock split. Monsanto also exploring some options. The stock up 1 5/8 at 42 1/4. It may in fact shed its chemical operations, including splitting into 2 publicly held entities, a life sciences company and a chemical firm. Coming up next, we will talk with discount broker Jack White, and we will travel along the yield curve with Sue Herera. We'll do that when Street Signs continue. Stay with us.
This program is brought to you by Countrywide Home Loans. Every 2 minutes, somebody gets a home loan from Countrywide.
Wherever there are front lawns, faraway brothers and sisters, stories to retell. There will always be a place you call home. And over the years, more people have come home because of Countrywide. Every 2 minutes, somebody gets a home loan from Countrywide. Easy, really.
Let's see. About 6 billion people on Earth. Less than half with phones. Most without cellular. Even fewer on internet. Just discovered life on Mars. Got work to do. Lucent Technologies. We make the things that make communications work.
Setting the standard is our commitment. Performance, service, teamwork, integrity. These are the hallmarks of leaders. J.B. Oxford & Company sets the standard for discount stockbrokers with full-service regional and international offices. J.B. Oxford & Company offers fast executions and personal brokers you can count on to help you achieve your financial goals. Choose from a complete array of investment vehicles, mutual funds, corporate, municipal, and government bonds, equity options, and money market funds. J.B. Oxford sets the pace with a low commission of only $20 for stock trades. Buy or sell 100 shares of IBM, $20. 1,000 shares of Coca-Cola, $20. Or 5,000 shares of MCI, the commission is still only $20 plus $3 postage fee. J.B. Oxford & Company. We're setting the pace and the standards.
You may not know that chemical companies keep finding new ways to clean up after cleaning up. They recycle used chemicals. Not only do they gain a source for raw material, at the same time, they have another way to reduce pollution, proving again that fresh thinking is a renewable resource. More responsible care from the members and partners of the Chemical Manufacturers Association.
As we've told you, something of a bloody day in the bond market. Sue Herera is here now with a look at today's yield curve activity. And Sue, not a pretty picture so far.
No, it really isn't, Ron. As a matter of fact, it looks like we really are going to end up on our lows of the trading day. In some sectors, we had a holiday-shortened trading session today because some brokerage firms will be observing a holiday on Monday. Retail sales report coming out on Friday, and also the producer price index coming out on Friday, really dominating market activity right now. But earlier on, as you mentioned, it was the jobs data. That's what everybody was watching. And it seems to indicate with the drop in claims that we may be seeing some strength in the job sector that most traders did not expect. And that's a big negative. It dominated trading for the early part of the session. The retail roundup, also generally speaking, a bearish indication, with some of the discount stores showing some big increases. And that means that we may see a jump in the retail sales report that comes out tomorrow. The paper, meanwhile, we have lots of paper coming to market, mostly on the corporate side, not as much on the Treasury side. And that corporate paper with yields where they're holding right now is very competitive to Treasury paper. And as a result of that, we might see the Treasuries get hurt at the expense of the corporate paper. Also, in terms of estimates for tomorrow's reports, retail sales, probably, according to MMS, a 0.4% increase on Friday. In terms of the PPI, probably a 0.2% increase, but watch the energy component. That's what traders are going to be watching. Let's take a look at where we sit right now in terms of the long bond, down 21.30. That's 3 ticks off our low of the day. 98.9 is the last trade. 688 is the latest yield. So, a negative day indeed. Back over to you, Ron.
Thank you, Sue. One quick news note before we move on to our interview. It looks like China on the trade front is playing a game of chicken with the U.S. A USDA official quoted by Reuters today says that China has now blocked the imports of U.S. chicken from 10 U.S. states, something that could lead to deteriorating relations between the two countries. We'll have more details on that throughout the day. Meantime, our next guest started his own discount brokerage firm back in 1973. Jack White is the president of Jack White & Company, and his firm recently started offering investors the chance to trade stocks electronically, which he says will save them money. He joins us now live from San Diego with more. Mr. White, good to see you. Thanks for being with us today.
Thank you.
This is getting to be an increasingly crowded field, and it seems like when that happens, it gets more and more difficult to make money where people charge less and less for certain services. How are you going to make money in this business?
Well, it is difficult, Ron. What we're looking at is a opportunity to split the spread on over-the-counter stocks, literally electronically match up buyers and sellers. And on our in-house computer system, we can match up buyers and sellers. A seller would save half the spread, the buyer would save half the spread. We would literally match them off, do it as an agent on a commission basis, and in many instances, certainly put money back into the pocket of our investor on both sides.
How big is that commission going to be for you?
Well, let's look at 1,000 shares. It's easy to figure the math on that. 1,000 shares of a NASDAQ stock, an over-the-counter stock, is split 1/4 point. That would be $250 of the spread. Half of it will go to the buyer. If we split it, we match them off. Half will go to the buyer, 125 to the buyer, say. We will charge them 5 cents a share at that level, which would be $50. So the buyer would be enhanced by $75 total. It's better than zero commission. It's literally splitting the spread is putting money back into the to the customer's pocket.
But still,
same thing for the seller.
You are competing now with companies like Charles Schwab. DLJ owns an electronic service. There's E-Trade. There are all these different services doing essentially the same thing. How can the little guys compete with the big guys that are becoming more and more, not just electronic traders, but really supermarkets for funds and no-load funds and all that?
Well, there's a big difference. The Charles Schwabs of the world and the E-Trades literally are sending their order flow to dealers. They aren't splitting the spread. They're sending those to dealers and either acting as a dealer themselves, in the case of Charles Schwab, where they own Meyer Schweitzer & Company, or they're getting payback, order flow payback from the dealer. We're doing something quite different than that. We're doing something that the big institutions are doing now through POSIT, where they literally go on intervals with their buys and sell profiles and split the spread. Now, an institutional investor, in my opinion, you know, it's not critical when you make the decision to buy a stock to grab the phone and place the order. An institutional investor will look at a buying profile or a selling profile, and anytime he can enhance the execution within that profile, he'll do it.
Now, at the moment, you kind of lack the order flow that could propel you into a position where you do compete with some of the majors. What other ways are you going to utilize to entice traders to enter the system?
Well, we have just announced this to our own clientele as recent as a couple weeks ago, so they're just learning about it. Most of our orders and indications so far have been big blocks, and it's more difficult to do big blocks. We probably will go to the second and third tier of NASDAQ stocks that are spread quite wide. That'll probably be an opportunity for us.
Let me ask you about that, though. I mean, in most cases, when the spreads are wide, it generally indicates the stocks are illiquid or trade infrequently. So how do you drum up enough business in stocks that don't have the volume of some of those big block trades?
Tremendous advantage to the buyer and the seller on an infrequently traded stock with a point spread. We can do it once a day, twice a day, 3 times a day, maybe once a week on a very thinly traded stock. Again, it's queuing up buyers and sellers in a computer and matching off and bypassing the dealer spread. Now, we're doing this 8 times a day in-house. We do it on the opening of the market and every hour on the hour and on the close.
What's the likelihood that some of you electronic guys are going to merge and kind of start to eliminate some of the competition that could get kind of cutthroat in this business?
Well, I think that likelihood is very probable come the first of the year, particularly because the rules are changing drastically because of the SEC's mandates coming on the first of the year. And many of the electronic brokers that are basically giving the trade away, giving the ticket cost away, because they're participating in the spread, are going to be hard-pressed to continue to do trades at $11 or $15 a flat trade.
All right. Mr. White, we have to stop there. Good to see you. Thanks for joining us today.
Ron, thank you for inviting me.
Sure thing. Jack White, president of Jack White & Company. Well, Ford Motor Company retools its operations and shakes up senior management. We will have that story and much more still ahead on Street Sides.
You trade with a discount broker to save on commissions. So let me show why Scottsdale Securities should be your broker. You'd save more than half on this 200-share trade over Schwab. On this 1,000-share trade, Scottsdale is $76 less than Waterhouse.
And if you qualify, our Super Saver account lets you trade for even less. Best of all, Scottsdale customers deal with their own personal brokers in 55 cities nationwide. Call 1-800-619-SAVE now for a free copy of your guide to commission savings. Member SIPC.
People are talking to people. They'll simply say it. You won't believe it.
You can believe it. Sprint's great dime-a-minute rate just got better. Not just a little better. No way. Sprint said,
let's give them something to talk about.
and this is it. Call for Sprint Cents and you'll pay just 10 cents a minute, 24 hours a day, 7 days a week to the number you call most often. So call now and start talking. And when you sign up for Sprint Cents, there's no confusion about what you're paying. It's always just 10 cents a minute on all your other state-to-state calls to anywhere in the country. Every evening, every night, and all weekend long.
Let's give them something to talk about.
On top of that, you'll get 10% cash back after your first year with Sprint. So call now. Get 10 cents a minute all day to the number you call most. Call now.
1-800-913-9728.
Imagine being able to test any trading strategy before risking a penny of your trading capital. Imagine your computer scanning the markets, instantly alerting you to profitable trading opportunities. With TradeStation, you can test any trading strategy and find systems that have consistently made money year after year. TradeStation can then automate your winning system on a real-time or end-of-day basis. And best of all, you can do all of this without being a computer programmer. To order TradeStation or for a free demo, call 1-800-793-0147, extension 1923. Call now.
Good afternoon, everyone. This is Street Signs. I'm Ron Insana. Here's what the financial markets are doing as we head into the final stretch of trading for a Thursday session. CNBC's market machine shows that the Dow Industrial Average is still on the downside by about 9 2/3 points at 5920.93 on Friday, and then again on Monday. The Dow flirting with 6,000, but since pulling back, the volume on the New York Stock Exchange today is again pretty heavy at 349 3/4 million shares. Market internal still negative, declines beating advances about 6 to 5 with 922 issues unchanged. We have the NASDAQ down about 2/3 off the lows of the day at 1237, about 13 points away from record levels, 452 million shares changing hands there. Standard & Poor's 500 off a couple of bucks, and the 30-year Treasury bond ahead of tomorrow's important producer price and retail sales data down 21/32. That's knocking the yield up to 6.88%. Aetna Life and Casualty looks to streamline its operations and the latest read on retail sales. But first, shareholders vote in favor of a Time Warner-Turner Broadcasting combination, and Terry Keenan is at the news desk now with all the details. Terry?
Thanks, Ron. Well, aside from some last-minute paperwork, it appears to be a done deal. Just about an hour ago, 99% of the Turner shareholders voted in favor of the $7.5 billion merger with Time Warner. And Time Warner shareholders also gave a near-unanimous thumbs up. The deal will create the world's largest media and entertainment company. A triumphant Ted Turner called it a dream, and Time Warner's chairman, Gerald Levin, declared, "We're now one team and one family." Well, Aetna Life and Casualty is restructuring its operations. That following its purchase of U.S. Healthcare. Aetna says it plans to eliminate 4,400 jobs and take charges totaling $307 million. In the credit markets, bond prices are lower ahead of tomorrow's reports on producer prices and retail sales. The Labor Department says initial jobless claims dropped by 22,000 last week, a sign of a tight labor market which could lead to wage inflation. Meantime, the nation's largest retailers are reporting spotty September sales. Same-store sales rose 5.6% at Walmart. They were up 7% at Sears and down 0.8% at Kmart. 45 people are being charged with securities fraud and other charges in what federal officials are calling a nationwide crackdown on illegal stock promotions. The investigation centering on alleged illegal payments to brokers for sales of NASDAQ and over-the-counter stocks. Arrests are being made in New York, California, and in Florida. And Ford Motor Company is restructuring its global product development operations. The move will reduce the number of Ford's vehicle centers from 5 down to 3. And Ford's chairman, Alex Trotman, says the moves are designed to increase profits.
The product changes we've made, the material cost leverage we've achieved through scale will roll through to the bottom line of the company. You're already seeing some effects of that over the last quarter or two. You'll continue to see that in the next few quarters, and a lot more of it over the next few years.
Ford also announcing a senior management shakeup, naming Group Vice President Jacques Nasser to replace Edward Hagenlocker as president of Ford Automotive Operations. And that is it from the news desk. Back to you, Ron.
Thanks, Terry. Elsewhere, more than a fifth of General Motors' North American production is shut down at this hour now that the Canadian auto workers' strike is fully phased in. Some 26,000 auto workers are now on strike in Canada, shutting down 8 plants and also starting a ripple effect in the United States. CNBC national correspondent Scott Cohn is following it all from our Chicago bureau. Scott, what's the latest here?
Well, Ron, it now becomes a complicated test of wills on both sides of the border. In Canada, the last of the GM workers walked out last night. Canadian plants supply parts for all but 3 of GM's 14 U.S. assembly plants. And the Canadians build some of GM's most important vehicles. Nonetheless, GM is not giving in so far on the union's demand for limits on outsourcing. And the union is standing firm, too.
Just because in a high unemployment economy or a low-wage economy, you can get someone to do this work cheaper, you don't have a right to sell our jobs as long as we're meeting the commitment of quality, productivity, low cost, and high profits.
caught in the middle are dealers at the start of the new model year. Buick and Pontiac dealer Irving Siegel says he has enough inventory for a few weeks, but he's looking ahead, worried about GM falling behind on some key vehicles that were due out the first of next year.
Particularly the Regal is going to be behind production, the new 97 Regal and the 97 Century, which is made up in Oshawa, Canada, as well as the Grand Prix, which is also now being produced in Oshawa, Canada. So those 2 or 3 models will be affected.
Complicating matters, the United Auto Workers here in the U.S. They are working without a new contract at GM, and sources tell us the talks there are going very slowly. Now, from what we're gathering from sources, the UAW so far seems to be letting the Canadians do the dirty work, and General Motors may well be trying to wait both sides out until at least supplies get thin. So far, GM has only laid off about 2,000 workers in the U.S. as a result of the Canadian strike, so all of this could only be just beginning. Ron?
Now, Scott, back in March when those workers on Ohio went in strike, GM tried to challenge the laid-off workers' unemployment benefits, and that turned the strike around, at least it seemed to. Is there any chance they will try that again this time around?
They won't try it, Ron, because they can't. The CAW is a separate union in a separate country, and under the existing agreement with the UAW workers laid off as a result of a strike by another union are entitled to their unemployment benefits. That may be why the UAW is able to sit back a little bit and, as I said, let the Canadians do the dirty work for now.
All right, thank you, Scott. Scott Cohn reporting from Chicago. Should point out also that shares of GM are down a half at 50. Coming next, we'll make a pit stop and find out what's happening in the commodity markets, particularly energy. And our Wall Street reporter David Faber will have the latest on the Turner Time Warner deal when Street Signs continues. Stay with us.
This program is brought to you in part by Alliance Capital.
Dear, I want to talk to you about our retirement.
Oh, I have so many plans.
We can't.
We can't what?
Retire. We can't retire. Not even think about taking a second job.
Kid.
Remember how we used to talk about putting some money aside?
Yes.
Well, we never did.
How did that happen?
Who knows? Listen, you like to get outside, don't you? Cut the grass. Lots of yards in this neighborhood. I see income potential here.
Don't let this happen to you. Plan with Alliance today. You, your financial advisor, and Alliance Capital, one of the largest investment managers in the world.
AccuTrade reason number 1, low commissions.
Some deep discount brokers say their commissions are low, but when you look closely, they're not as low as you think. At AccuTrade, our commissions are $28 plus 2 cents a share. There are no games.
AccuTrade reason number 2, customer service.
Having trouble getting through to your deep discount broker? At AccuTrade, great customer service is as important as low commissions. So if you're not happy with your broker service, isn't it time for a wake-up call?
AccuTrade, over 100 reasons to open your account.
What do you need to trade futures on your own? Information. And that's what you get at Lind Waldock. We call it our Intro Account Kit. It's the most complete package of trading support available anywhere, and it's yours free when you open a new account. You get charts, futures magazine, newsletters, a complete guide to order placement, daily telephone hotlines, and even discounts and commission credits on real-time quote services. Lind Waldock's Intro Account, 1-800-445-2000.
The styling of the Acura CL Luxury Coupe was designed with the old rule in mind that you never get a second chance to make a first impression. And here to break that rule is the new 3.0 CL. With a new 200 horsepower V6, it lets the CL make a second impression even more powerful than the first.
In Ticker Talk today, the bond market's recent behavior illustrates an unusually skittish set of credit market participants, even though the range for the 30-year Treasury bonds yield has been unusually tight for quite a time. The long bond for much of this year has bounced back and forth between 6.75% yield and about 7.25%. But the intraday swings have been sharp enough to get the yield to each of those extremes in a relatively short period. Now, amid concerns that tomorrow's inflation and retail sales data will be stronger than expected, it appears that hedge fund speculators have been bullying bonds lower today and yesterday, making reasonably large leveraged bets that can prove quite lucrative in the near term. And that seems to be the order of the day lately. Trade the numbers until a clearer long-term trend emerges. Now, clearly, the bond market is stuck in the middle of believing the Fed will ease and believing the Fed will tighten before year's end. The push-me, pull-you struggle makes long-term bets nearly impossible, but makes trading the swings the thing to do. And that's Ticker Talk for a Thursday. All right, well, as you know, shareholders of Time Warner and Turner Broadcasting have overwhelmingly approved a deal that will create the world's largest media company. Turner shareholders voted for the merger a few hours after Time Warner shareholders did as well. The deal, of course, worth $7.5 billion. Our David Faber was there and is standing by in Manhattan with the latest details. David?
Thanks, Ron. You know, of course, we have been discussing the merger of these two giants to create an even larger company, as you just said. But as well, there's been an interesting story going on here, specifically in New York, with regard to whether or not the Fox channel will be available. That's the new all-news channel that is up and running, but is not available in New York City, the media capital of the world. And our own mayor here in New York, Mayor Giuliani, has sort of interjected himself into a fray between both Rupert Murdoch and Ted Turner. Now, I did have a chance earlier to talk to Time Warner's president, Dick Parsons, and ask him all about what his thoughts are about Mayor Giuliani and whether or not Time Warner will carry the Fox channel.
I do know the mayor. He's a friend of mine, but I haven't spoken to him directly about this issue. But we've communicated our views to his office, and I think City Hall knows that we think, frankly, this isn't about Fox News. This is about the proper role that a municipality can play in terms of trying to dictate what kind of content a cable operator carries. It's clearly, in our judgment, a matter that rises to the highest levels of kind of, you know, Jerry Levin just spoke about journalistic integrity and independence. Our view is that the city has no role in determining what kind of programming we carry, and we've communicated that to them.
Now, moments ago, actually, I caught up with Mayor Giuliani, and I asked him to respond.
Well, I mean, Dick is entitled to that opinion. The contracts say what they say, and we do have a right to put programming on. And it's curious that when we made this suggestion and actually accomplished it with regard to 4 or 5 other stations, there was no complaint at all by Time Warner. They, in fact, were supportive of it. So I don't know what would be different about this programming. That programming involves foreign language broadcasting, but some of it involves news, some of it involves entertainment. It's broad-based kind of programming. It's commercial in nature. In fact, they run the commercials and make a profit from it, and Time Warner waived all that with regard to all of those stations. So now Bloomberg and Fox are in that position, and I don't know what the distinction would be. There can't be a legal distinction. There must be some other.
It was interesting, during the earlier shareholder meeting, Time Warner's chairman, Gerald Levin, made references to the fact that they have an awful lot of employees who are in Manhattan. As well, Turner, Mr. Turner himself, you may see him exiting the meeting. He didn't talk to anybody after the meeting, but during the meeting, he did take a question from a shareholder as regards to what's the fate of Turner Classics, the movie Classics channel. And Mr. Turner said, well, why don't you talk to Mayor Giuliani? Maybe he can run that in New York instead of the Fox channel. Ron?
You know, David, there is an interesting battle that could take place here. I mean, just from, you know, observing this scene for a while, you've got a lot of large employers in New York that are involved in this battle, from General Electric, which owns NBC, to News Corporation, to Turner and Time Warner. This could get extraordinarily nasty in political terms. Is there a feeling right now that indeed the gloves could come off?
You know, I didn't get that sense in both talking to the mayor and to Mr. Parsons, who is a good friend of the mayor's, and you can expect that they will have some conversations. The mayor, in fact, said, I don't view it as a battle right now, but nonetheless, you are absolutely correct, and it's certainly no secret, and Mr. Levin made it no secret today. Time Warner employs an awful lot of people here, as does Fox now. Very close by is their new studios, and NBC, our glorious employer in that building over to my left that had a fire today, also employs many, many people. So the battle could heat up. Right now, though, both sides are saying, well, we're not willing to say it's even a battle at this juncture.
All right, David, thanks. We'll see you a little later on. Okay. David Faber in New York. When we come back, we'll make a pit stop and see what's happening in the oil market after this.
What do today's investors want? Lower commissions. You'll pay less at today's Quick & Riley. up to 73% less than Merrill Lynch and Smith Barney, and up to 33% less than Schwab and Fidelity. Trade with Quickway Plus software or by touch-tone phone and save an extra 10%.
I want access to my portfolio.
You've got it 24 hours a day with online investing.
I want to do it all by phone.
You can with touch-tone trading or our 24-hour trading desk, or visit our branch offices. Call now for Quick & Riley's $135 investor kit with valuable information, exclusive reports, Quickway Plus and Microsoft Money. Free for a limited time when you open an account.
I started Quick & Riley to help you do better.
Quick & Riley, where independent investors do better every day. Call now.
According to Mutual Funds magazine, tough guys finish first. The fund industry's toughest portfolio managers, Lawrence Oriana and Hans Utsch, have made the Kaufman Fund the #1 fund since the market low of December 4th, 1987. The fund invests in small companies with substantial growth prospects. The Kaufman Fund was awarded Morningstar's highest 5-star rating. Call now for your prospectus, 800-824-4200. The Kaufman Fund, 800-824-4200.
The styling of the Acura CL Luxury Coupe was designed with the old rule in mind that you never get a second chance to make a first impression. And here to break that rule is the new 3.0 CL. With a new 200 horsepower V6, it lets the CL make a second impression even more powerful than the first.
Why is Ceres Securities one of the fastest growing deep discount brokers? With Ceres, you can trade as many shares of any OTC or listed stock you want and pay just $18. No restrictions. Plus, whether you trade by phone, internet, or live broker, you still pay just $18. No extra charges. No wonder Ceres is rated #1 for best commissions by Worth Online. Ceres Securities. Simple, no-nonsense trading.
All right, time now for a pit stop. And every day, as you know, we talk commodities at this time and also show you what's happening in the futures markets. Joining us today with his thoughts on the energy sector and other commodities is Bill O'Neill. He is Director of Futures Research at Merrill Lynch, who joins us from the New York Stock Exchange. Bill, good to see you. Thanks for being with us today.
My pleasure.
Let's start with oil, down 70 cents on the December contract, breaking below $24 by a few pennies. What's suddenly wrong with the oil market here?
Well, I don't know that anything's suddenly wrong with it, but there's some speculation in the market today that perhaps the Saudis were getting a little bit concerned about the runaway pace of the market and that they might be willing, or some of the other OPEC members, such as the UAE, might be willing to up the quota levels. Totally unconfirmed, and it has been denied, as a matter of fact, by the Gulf spokesman as the day progressed. Also, there seems to be a growing feeling that there's a push also to get this Iraqi thing through, particularly with the recent cozy dealings between the Turks and the Iranians.
I thought, however, that the UN yesterday said the conditions for an Iraqi oil sale still haven't been met.
Exactly, Ron. You hit the nail on the head. This is all just speculation. It's all talk. You have an oil market that was just below the Gulf oil highs, and these stories circulating, and at these levels, you're going to see a lot of volatility.
Yeah, let me ask you, what about the weather, Bill? You know, that was blamed for a run-up in energy, and now it looks like we're going to get, what, a 38-degree overnight low in the New York area. Is that going to play a role again in this market as well?
Well, in my view, the heating oil market is actually the market that's going to determine what the crude oil does, barring some sort of catastrophic event in the Middle East. 75-cent heating oil discounts a lot of cold weather, so now it's kind of up to the weather to prove the point. I don't really see any long-term weather patterns that indicate we're going to have a bitter cold weather run, but we're really probably going to go into a weather market from this point on, unless we do in fact see something at the November OPEC meeting that would allow for higher production. I'm not so sure you're going to see that at this point, though.
Yeah, why not, Bill? I mean, it does seem that it's not necessarily in the Saudis' best interest to see oil prices spike higher, given the balance of power, as you suggested earlier, seems to be shifting maybe a little bit in the Middle East. Would they want to drive the price back down against that backdrop?
Well, no, I don't think they want to drive it back down, but I don't think they want to drive oil prices to the level that they could contribute to an economic downturn. And I think that they probably feel that prices in a $20 to $25 range are fully acceptable. But let's face it, that's ratcheted up from a year and 18 months ago. It's a pretty decent price and kind of an ideal price. The Saudis have always been the best businessmen, if you will, in OPEC. And I think there may be, if nothing else, a little jawboning going on here to slow things down.
All right, a quick comment, if you would, about the metals. Copper bounced up, and then silver and gold didn't look too bad today either.
They're looking a little bit better, but it's strictly short term, Ron.
Yeah.
I still haven't changed my view. I would look to sell silver if it should rally up to the 525.30 level. Copper, key day tomorrow in London. It's right up against some resistance. If we get a stock decline and push up, we could have a little run there. But again, I think if the market got up in the 98, 99 cent range, it would be a good sale on a long-term perspective.
All right, Bill, thanks for joining us.
Okay, Ron.
Bill O'Neill, Director of Futures Research at Merrill Lynch. Before we close out this hour, let's take a look at how the overseas markets fared in today's action, beginning in London, where the market was able to regain most of its losses by the end of the session. Stocks were lower after a smaller than expected rise. In fact, it was a bigger than expected decline, really, in jobless claims. In the U.S., the Financial Times 100 index fell 14.5 points to 39.94 and change. The jobless claims number also sent French stocks sharply lower. It hurt the U.S. bond market, as you know. Investors now looking ahead to Friday's U.S. retail sales and producer price numbers. The CAC 40 down about 11 points to 21.35 and change. German shares, meantime, closed lower, pulled down by a weaker German debt market. The DAX fell 22.25 points to finish the day at 26.8075. And in Mexico, the Bolsa down about 9 points at 33.63. In Asian markets, the Tokyo stock market was closed for Sports Day today. It'll resume trading tomorrow, while finally Hong Kong finished on the downside, just shy of Wednesday's record closing high. The Hang Seng off about 8 points to 12,242.47. Well, after years of lagging the Asian economic powerhouses, the Philippines may be about to take its place in the den of tigers. Anywhere else, that would be a sign of a place where investment fortunes could be made. But Philippine analysts and brokers are hesitant to recommend putting your money in Manila stocks. CNBC's Bill Hartley has more.
Corruption at the highest level of government defined the Marcos years. Ferdinand Marcos nearly bankrupt the Philippine economy. Billions may have been siphoned off to cronies and secret bank accounts. More recently, flooding damaged last year's rice crop, causing food shortages. That pushed inflation to a whopping 11% rate late last year and in early 1996. High inflation, empty public coffers, that kept Philippine economic growth far below that of the Asian tigers. Gross domestic product expanded only 4.8% last year. Only the highly industrialized Hong Kong economy posted slower growth. That has earned the Philippines the moniker the sick man of Asia. But these days, the patient seems to be on the mend.
The Philippines is the outstanding growth story in the Asian region right now.
Economists look for Philippine economic growth to accelerate to 6% in 1996. That while growth in the rest of Asia slows. And the Philippines got more good news last week. Consumer prices rose by just 4.4% in September from a year ago. That's the nation's lowest rate of inflation in more than 9 years. Last year, storms wiped out much of the nation's crops, causing food shortages and sky-high prices.
So food prices was a short-term factor driving up inflation last year and therefore drive down inflation this year.
Accelerating growth, falling inflation are usually factors that prompt a rally in stocks. But Manila's composite index has fallen 4% since the September inflation numbers hit the press. At the same time, America's Dow Jones index hit an all-time high. But analysts say there's no fundamental problem with the Philippine market. They say investors have already bought Philippine shares in anticipation of falling inflation. In other words, if you're not in the market now, they've beaten you to it.
Basically, many foreign investors who specialize in the Asian region are double overweight the Philippine market vis-a-vis the Morgan Stanley Capital International Index. And the reason for that is that the Philippines has been one of the few markets in the Asian region where you can confidently expect very impressive earnings growth.
Certainly, the Philippines has been one of Asia's best performing markets this year. It's up 17% since the end of 1995. That is below the sizzling Taiwan and Hong Kong markets, but stronger than most every other market in the region. Most of the gains are coming on improving economic fundamentals, but investors are also attracted by the increasing sophistication of the Philippine Stock Exchange.
People can see that the credibility of the market improve, the volumes, the liquidity, and generally the overall growth for the economy of the capital markets.
A rosy economic scenario and a more dependable stock exchange, the future looks bright for the Philippines. But analysts say investors perhaps should not join the party. It may be too late.
Well, I think they should be selectively taking profit.
The Philippine market may be the latest belle of the ball, but many analysts say the last dance has already been played. Bill Hartley, CNBC Business News, Hong Kong.
All right, let's see what's happening a little closer to home. The Dow Industrial Average unable to mount a rally today and still under some pressure thanks to a weaker U.S. bond market. The Dow Industrial Average down somewhere between 9 and 12 points, as you can see, at 5917.95. Volume on the New York Stock Exchange actually a little lighter than it's been for the last couple of days. 373.9 million shares changing hands. Players a little bit hesitant to take positions ahead of tomorrow's producer price and retail sales reports. Declines beating advances about 6 to 5 on the New York Stock Exchange. 911 issues are currently unchanged. The NASDAQ backing off just modestly here, down 3/4. We saw a little softness in Intel and Microsoft earlier today. The NASDAQ at 1237 is about 13 points away from record levels. 478.9 million shares changing hands there. As for the S&Ps, down 2.5 points at 694.24, while the 30-year Treasury bond has been under some pressure this afternoon, as we said, down 20/30 seconds to 98 10/30 seconds, and that leaves the yield at 6.88%. Tomorrow, a critical day. We should point out again that with respect to producer prices, a lot of folks on the street are looking for about a 0.3% gain in the overall PPI and a similar increase in the core rate. As we told you between last week and yesterday, Donald Radachik of Georgia State University looking for something a little bit higher, a 0.4% gain in the overall rate, a 0.5% increase in the core rate, a payback for a rather tame August report, late fall fashions and a few early introductions of cars, things like that, all playing into the mix in August. Captured a little bit early, depressed the August PPI. Looking for a bounce back tomorrow. He says, however, inflation's not breaking out. Critical concept in this debate. Coming next, the closing bell on Wall Street. You are watching Street Signs on CNBC.
If I Were President, sponsored by AT&T, for the life of your business.
Hi, I'm Dan O'Brien from the University of Idaho. If I were president, America's children of every color would grow up in a nice, safe place, with a loving family able to provide for their needs, learning from dedicated and well-paid teachers and coaches. All children need to feel that they are each special in their own way.
No matter what size fax you send, no matter where in the world you send it, AT&T guarantees it'll get there. Because now, AT&T has 70% more international routes, which means more ways to get around trouble and more ways to steer clear of danger. So your international fax gets through. No matter where in the world you send it. Guaranteed network reliability at a competitive price, only from AT&T for the life of your business.
I'm not running for president, but we all have a say in who our president will be. Please vote on November 5th.
I'm an actor, and I've been doing okay. I recently heard about the ASM Fund, the only mutual fund that echoes the Dow. Basically, whatever the Dow does, the fund does. And over the last 10 years, the Dow has outperformed over 90% of all equity mutual funds. Seems like a no-brainer.
The ASM Fund invests in the 30 blue-chip companies that make up the Dow.
So even though I'm a small investor, I can play with the big boys.
Call 888-ASM-FUND and put the power of the Dow to work for you.
It's 3 a.m. and the markets are closed. But top brokers and money managers around the world are already receiving important information crucial to their clients' success. News from a leading source sought after by America's foremost reporting organizations, individual investors, and money managers. It's the daily report service of International Market Call.
Each night, we analyze both the price and volume activity of more than 2,400 stocks. Then we issue 4 reports per week, including both fundamental and technical data, and a unique early morning fax service announcing our breakout recommendations.
Call today for our special $15 trial subscription offer and receive your choice of either 1 week of our early morning fax service or 1 month of our mail-out service. In addition, we'll include a copy of our Hot Picks for 96 free of charge.
Our subscribers have enjoyed over 150% increases on past recommended small-cap companies. with more great news coming in future editions.
Thank you.
Call today for our $15 trial subscription and our hot picks for 96.
Attention qualified investors. Today's futures markets offer explosive opportunities, but today's trends demand high-performance, incentive-based professional futures money managers. First Futures and Commodities Group can show you how others have profited 25 to 50% or more annually. Call 1-800-365-7715 right now, and we'll send you a ranking of the top 50 futures money managers in the world, as provided by Daniel B. Stark & Company. Call 1-800-365-7715 and find out why your